So in this lesson, we are proceeding our discussion on earnings per share. So we've already had the introduction aspects, and also when there is a market issue, how do we determine our basic earnings per share? We've looked at that already in our previous lesson. Okay, so in this lesson, we are proceeding from where we ended on our previous lesson. So if you've not, watched that first one, you can check on the channel. It's there so that you watch earnings per share 1. Then you can appreciate the earnings per share 2, which is this particular lesson we are about doing. So I really emphasize in the first video that we have series of scenarios or series of circumstances. Depending on how the shares of the entities are issued and how you determine your basic earnings per share. So in our previous lesson, we look at when there is a market issue. When there is a market issue, how do you determine your basic earnings per share? In this lesson, we are going to look at when there is a bonus issue, how do you determine your basic earnings per share? You look at when there's a right issue. You look at when you combine the bonus issue and then the market issue. When there's a market issue, when there's a bonus issue together in the question, how do you determine your basic earnings per share? And probably if we have enough time, then we look at diluted earnings per share, or we will look at diluted earnings per share in our another lesson. Remember, this is Ronas Academy, and we always want to make all the complications in IFRS is comprehensible. So if you have enjoyed or you've benefited from this lesson, don't keep it to yourself. Share with others so that we can have a very wide learning community. Let's help us reach out to other learners so that we can broaden our learning community. Don't forget to subscribe if you've not done that yet, and also share and comment if in case you have any questions that you want us to address. All right. So, like I said, we are proceeding our lesson on earnings per share. Here, I'm going to just make it earnings per share, which is the E.P.S. Don't forget, in our previous lesson, we earlier emphasized that each accounting provisions, each treatment is outlined in IAS 33. So, we have IAS 33, accounting for earnings per share. Okay, so like I said, today our focus is going to be on how to determine our basic earnings per share. Our basic earnings per share, basic earnings, so EPS, all right? Earnings per share when there is a bonus issue, okay? So when there is a bonus issue. Now, when I talk about issue, I'm making reference to shares, how shares are issued by an entity. In the previous lesson, we look at when there is a market issue. I said that when there's a market issue, it simply means that we issue the shares to the general public at a market price, in fact, at a fair value. That is what we call a market issue. And I stated that anytime that you have a question that didn't specify whether it is a bonus issue, whether it is a right issue, in a moment you look at what is a right issue. When they are silent, then that is basically making reference to a market issue. But if you see bonus issue is also known as capitalization issue or scribe issue. We will come then. That is what we are going to do in a moment. So if you see a question and there is no information pertaining to that particular statement, particular issue, then it is a market issue or a fair value issue. Then we've looked at how to determine our basic earnings per share on that particular circumstances. So we are not going to go with it over here. Okay. So our focus here is how to determine our basic earnings per share when the issuance of shares is a bonus issue. Don't forget the formula still is the same. It's our profit after tax, or we'll call it earnings attributable to ordinary shareholders. Earnings attributable to the parent entity, or ordinary shareholders, like I said earlier, it's called. Okay, then divide it by weighted average number of shares, outstanding during the period. So we divide it by this to get our basic earnings per share. All right. Remember that with the profit after tax, you need to adjust it in case there are some cumulative, in fact, non-cumulative preference share dividends for the period and it has not been adjusted on it. You need to adjust it by lessening it before you can guide your profit that is attributable to the ordinary shareholders, or maybe you call it the parent entity. All right. Now, when there is a bonus issue, when entities issue shares, and that is a bonus issue for during the period, those shares does not give any additional resources to the entity. What do I mean by that? We are assuming we are looking at entity A, and then entity A is capitalized with 100,000 shares. It's capitalized with 100,000 shares. Okay, entity A is capitalized with 100,000 shares, and then during the period, entity A issues 1 for 5 bonus shares. So it's issue 1 for 5 bonus shares. All right. Like I stated earlier on, when we talk about the bonus shares, they are also known as capitalization issue. Capitalization issue. We can also call them scrip or scrip issue. Okay, so if you see in your questions, you see capitalization issue, you see scrip or scrip issue, they are referring to bonus issue. Don't be confused. All right. So we are saying during the period, the entity is issued 1 for 5 bonus shares. What it means is that the entity has issued, assuming this is happening on 1st of April during the period, the entity has issued 1/5 times the existing shares of 100,000. And this is going to give us 5 divided by this will give us 20,000 shares. So the bonus issued is 20,000 shares. Now, these 20,000 additional shares being issued by the entity does not give any additional resources or income or capital to the entity. That's why it is bearing the name bonus issue. The bonus issue increases the shares, but it does not have any or carry any additional resources or capital to the entity. What it means is that the position of the entity's capital structure before the issuance of a bonus issue will be the same after there is a bonus issue. So just bear that in mind. That anytime there is a bonus issue, it doesn't give the entity any additional capital. With this, how do we calculate our basic earnings per share when there is a bonus issue? Anytime the question is just a bonus issue, and there is a bonus issue during the period, the assumption is that the bonus issue is assumed to have been issued at the earliest of the beginning period or the accounting period of the entity, at the earliest. So when there is a bonus issue, we don't take into consideration the time fraction, because the assumption is that it has been issued at the earlier or the earliest of the reporting period of the entity. Using this example, let me illustrate that. So you see, this issue was on 1st April, let's say during the year. And from the beginning, we were capitalized with 100,000 shares. Under the normal circumstances, if you look at how to determine weighted average number of shares outstanding during the period, we are supposed to apportion this particular 20,000 shares to reflect the time it was issued. So since this one was issued on 1st April, it would have taken 20,000 times 9/12, and then the 100,000 will take 12/12, because that one is at the beginning of the period. Then we will get our weighted average number of shares. But the question is, or the issue here is different when it is only bonus issue. The issue is different. The circumstances is different. Here, we are assuming that this bonus issue was issued at the beginning of the period. The implication or the reason for this is that this bonus issue does not give rise to any additional capital to the entity. So, if you do this for a question that contains only bonus issue, please, you are wrong. This, although it is being issued on 1st April during the year, it will also take 12 over 12. It will also take 12 over 12. So all bonus issues are assumed or they are deemed to be issued at the earliest of the reporting period of the entity. Kindly take note of that. Please, this is when it is only bonus issue. In a situation where we have bonus issue plus market issue, the circumstances will be different. All right. Now let's go into details. Anytime there is a bonus issue, you need to look for a bonus fraction. Although in this case, we are not going to use it, but I want to teach you how to determine a bonus fraction. Now, let's see. There is an issue of 1 for 5. That means that you are issuing 1 share for every 5 existing shares. So what it means is that after the bonus issue is being issued or is being done, after there is a bonus issue, every shareholder is likely to have 6 shares. The addition is 1 plus 5, issuing 1 for 5. So it's giving us 6 shares. Now we divide these by the existing, which is 5. So here, this is how we determine our bonus. This will become our bonus fraction. Assuming it is 1 for 3, our bonus fraction is going to be 4 over 3. It means that after the bonus issue, the shareholder is going to have 4 of the shares now, divided by the existing one is going to give us the bonus fraction. Don't forget, if it is 6 for 4, 6 for 4 is going to be 10 divided by 4. If it is 3 for 7, is going to be 10 divided by 7. This is how to determine our bonus fraction. We will need it. This is how to determine bonus fraction in these circumstances, because we will go to the right issue and how to determine the bonus fraction will be different. So in a moment, we are going to take some examples on how to determine basic earnings per share when there's a bonus issue. So assuming we have this example, assuming we have 2 years, we have 2020 and then 2021. In 2020, the profit after tax is, let's say, is $460,000. So $40,000, and then the year is $550,000. All right. Now, at the end, that is, we are looking at the 31st of December 2020. The entity is capitalized with 1 million shares. So that is for 2020. So the entity is capitalized with 1 million shares. Now the entity issued a bonus shares. So there was a bonus issue. In 2021. And this bonus issue was 1 for 3. 1 for 3 on first of April. Let's just make use figure. So on 1st of April. All right. So there is a bonus issue which is 1 for 3 on 1st of April. Now the question is, how do we determine what is your basic earnings per share? Basic earnings per share. So the formula already on the board for the 2 period. Okay, we are going to do that for the 2 period. Now the assumption here is that, remember that anytime there's a bonus issue, we assume that the bonus issue was done at the beginning part of the reporting period. So here, we don't basically need the table that we need to compute for our weighted average number of shares. We don't need that table, because we assume that this bonus issue will be in existence from the beginning. So it's going to take the 12 months. So we don't need any apportionment. That is the case when there is a bonus issue. So here we can go straight away. So we are looking at 2020, then 2021. Now, we are looking at our basic earnings per share. So in 2020, what is our profit after tax is given to us? 2020 is $460,000. And then 2021 is $550,000. Now we divide this by the weighted average number of shares. So here we need to look at the bonus issue, the number of shares issued. Okay, so the existing shares before the bonus issue is 1 million. So here we are going to have 1 divided by 3. This is how to determine the bonus shares. How to determine the bonus shares. So the bonus shares is going to be the 1 for 3. So 1 divided by 3. This is different from the bonus fraction. Okay, so the bonus fraction would have been the summation of this plus this, which is 4, all divided by 3. That is going to be our bonus fraction. Okay, so in this case, the number of shares is going to be 1 over 3 times the existing shares, which is 1 million, which is 1 million. So this time, 1 million. So let's see what that's going to give us. So 1 divided by 3 times 1 million. So that's giving us 333,000. So 333,333. So we are leaving this figure in a whole number. So this is going to be our bonus shares. So we are going to add this to get our total shares. So 1,333,333 shares. So this is going to be the shares for the period. Now, because of the assumption of bonus issue, it's going to be the same for 2020, the previous year, and it's going to be the same for 2021. Don't forget. Now, I'll show you another trick to get it for this will have been the comparative period. What is our current period? Okay, so in 2021, we are going to divide this by 1,333,333 shares. The same will apply to this 1,333,333. So this will give us the earnings per share for 2020 and then 2021. So let's see what we are going to get. So it's going to be 460,000 all divided by 1,333,333, and that is giving us $0.35 per share for 2020. Please take note, this is the previous year, comparative year, but because of the assumption that bonus issue as they are assumed to be, the shares are assumed, this shares was issued on 1st April 2021, but it is assumed to be existence in the beginning of the period. That is why we are using the same thing here, Sometimes a question will give you these 2 years, and it will ask you to compute for the comparative earnings per share, and that is all we are doing. That is all we are doing here, comparative earnings per share. Now, I'm going to show you another way to determine the comparative earnings per share without necessarily going by using this particular figure, and we will get the same thing. Okay, let's calculate for this one before. So that is going to be 550,000. So 550,000 all divided by this is going to give us $0.41 per share. So this is our basic earnings per share for 2020 and basic earnings per share for 2021. When there is a bonus issue, this is how to deal with it. Please, the bonus issue does not follow the market issue principle. So the bonus issue, the assumption is that the shares will be in existence from the earlier part of the business. So with that one, you don't need the table to determine your weighted average number of shares. What you need to do is to get the shares, or in fact the total of the bonus issue. So if it is 5 or 6, then you multiply that 5 over 6 by the existing shares to get the bonus issue. So that is how to deal with it. Now, I was talking about the comparative period. The comparative period is basically the previous year. Now, in case we don't want to use this approach, then we will take the 460 and divide it by the existing shares. This was in the period for 2020, the comparative period. Okay, so we are going to take the 460,000 divided by the 100,000, and then, sorry, this is 1 million, okay, divided by 1 million. And then we multiply this by the inverse of the bonus fraction. The inverse of the bonus fraction. So we multiply this by inverse. So inverse of bonus fraction. Don't forget. inverse of bonus fraction. So in this case, our bonus fraction was 4 over 3. So we will multiply this by 3 over 4. And this should give us the same 0.35 dollars per share. So let's try it and see if we are going to get that. So it's going to be 460 divided by 1 million. And that's giving us 0.46. We multiply this by 3 over 4. And it's giving us 0.35 per share. So another way to determine the comparative basic earnings per share is to take the existing shares the entity is capitalized with. Then we take the profit for that particular period. Then when you are done, you multiply everything with the inverse of the bonus fraction. The inverse of the bonus fraction. That will give you the comparative basic earnings per share. So from here we can see that, the entity was able to increase its basic earnings per share in 2021. There is a assumption for the comparative computation of basic earnings per share. So this is it on bonus issue. This is it when there is a bonus issue. Now we want to take when there is a bonus issue and there is a market issue in the question. How do you deal or how do you calculate basic earnings per share? When there's a bonus issue in the question and there's a market issue in the question, how do we deal with basic or how do we compute for basic earnings per share? Alright, so when there's a bonus issue and there is a market issue in the same question, then remember that here we are going to apply the bonus fraction. You see, all this while we're talking about bonus fraction, but we've not applied it. This is the only case or situations where we apply the bonus issue is when there is a bonus issue and market issue in the question, and then there is a right issue. Under these two circumstances, we apply the bonus fraction together with the time fraction. Now, this is how it operates. Anytime you get a question and the question contains, we have bonus issue. Now, you know what is bonus issue plus, you know what is market issue, so I will not go there again. So we have bonus issue and then market issue or shares issued at the market price. That is basically the market issue. Shares issued at the market price, basically the market issue. In a question, now this is how it operates. We are going to look at the table. For you to get your basic earnings per share, which is our profit after tax divided by the weighted average number of shares outstanding. Now, how do we get this basic, the weighted average number of shares? The weighted average number of shares. So we are going to use the table. So here we have dates. We have our date over here. We have our date. Then we have our shares. Then we have our, let's look at bonus fraction. Bonus fraction. And then we are going to have time fraction. Then we are going to have our weighted average shares over here. All right. So this is the situation where there's a bonus issue and there is a market issue. Now, when there's a bonus issue and there's a market issue, we are going to apply the bonus fraction up to the dates of the bonus issue. So that assumption that the bonus issue was in existence previously when we were looking at the bonus fraction or the bonus issue, it doesn't hold here. It doesn't hold in the situations where the question is the combination of market issue and bonus issue. We are going to apply the bonus fraction from the dates, from the beginning of the period up to the date that there was a bonus issue. So why don't we take a practical questions and use it to establish our understanding on these particular circumstances. All right. So I'm writing the question here. Assuming we have profit after tax. So these are profit after tax of 220,000, and we have a non-cumulative preference shares dividends. So let's make this one $250,000 for the year. Preference share dividends. So dividends of 30,000 dividends. So non-cumulative preference share dividends of $30,000. Okay. Now the shares we are looking at 2022. So at first of 2022, the entity was capitalized with we are looking at 1 million shares. So the entity was capitalized with 1 million shares on first of the beginning part of the entity. All right. Now there was a market issue. So there was a market issue on 1st of April 2022, and this market issue was 300,000. So there was a market issue on 1st of April of 300,000, and there was a bonus issue on 1st of August, that is 08 2022, and the bonus issue was let's use 1 for 5. The bonus issue was 1 for 5. And then there was again a market issue. On 1st of October 2022 of 200,000 shares. 200,000 shares. These are shares. 200,000 shares. Okay. So this is the question we have. So we have profit after tax of $250,000. We have non-cumulative preference shares of 30,000. Then we have the various issues. So the entity was capitalized with 1 million shares from the start of the business, and make a market issue on 1st of April, a bonus issue on 1st of August, and a market issue on 1st of October. Now the question is, what is your basic earnings per share? Now, our basic earnings per share is going to be the profit after tax adjusted with this particular non-cumulative preference dividends, and then our weighted average number of shares outstanding during the period. How do we get the weighted average number of shares outstanding during the period? Since we can easily compute for our profit after tax, we take this figure, we less it by this, that will give us the figure for profit after tax to be used. But our weighted average number of shares, we need to pass it through this particular table to get a final figure to be used. Now this is how to determine the weighted average number of shares when we are having these circumstances: a market issue plus a bonus issue in the question. Now let's see. Now on 1st of January 2022, we are having a shares of 1 million. We are capitalized with the shares of 1 million. Now we need to determine our bonus fraction. The issue was bonus issue for 1 for 5. So our bonus fraction in this question is going to be 6/5. That is going to be our bonus fraction, 6/5. Remember, this is 1 new shares for every 5. So the 5 is the existing. 1 new shares for every 5. That is the meaning. 1 new shares for every 5. Every 5 existing shares. So at the end of the bonus issue, we are going to have 6 shares as as a shareholder. You are going to have 6 shares against the existing of 5. That becomes the bonus fraction. So we are going to apply this bonus fraction up to this date that it was issued. Up to this particular date that it was issued. We are going to apply it up to this date that it was issued. Okay, so here our bonus fraction is going to be 6 divided by 5. Then we need to apply the time fraction here. Now, take note, when we are using this particular approach, or you have these circumstances, you cannot use the single period method where you multiply this by the time fraction by 12. No, we can't use this particular approach here. We can't use it. You may be wrong. You can also use it depending on your understanding. So here we have to use the cumulative period. We can also use it if you only understand. So here, if you're using the single period, this will be 12/12 because it's going to take the full year. Then Subsequently, you look at the apportionment. But here we are going to look at apportionment. We are going to do the cumulative one. All right. So if you are using that approach, then we are asking ourselves, when was our next issue? When was our next issue? And our next issue was on 1st of April 2022, and this was not our bonus issue. So we can take a time fraction. So from 1st January, February, and 31st March, three months. So here we are going to divide this one by 3/12. So this will give us the first particular shares, this one. Now we go to the next issue. The next issue was a market issue of on 1st of April 2022. So in this case, we are having our existing shares. So existing shares of 1 million. And then we have our new shares. So new is on 1st of 4th 2022. And this is giving us 300,000. So now we are capitalized with 1,300,000 shares as at 1st of April 2022. So we also multiply this by 6/5. Now we need to go look for the time fraction. When was the next issue? The next issue was on 1st of August. So April, May, June, July. That is 4 months. So April, May, June, July. 4 months. August will not be part because it was on 1st of August. So August will not be part. So here is going to be 4 divided by 12. Now the next issue is a bonus issue. So from the date of the bonus issue, the bonus fraction does not apply. Let's see. So in this case, what is our existing shares? Our existing shares is going to be 1,300,000. Now what is our bonus issue? So now this is our bonus issue. So it's going to be, they said 1 for 5. So 1 divided by 5 or multiplied by the existing shares of 1,300,000. 1,300,000. So if you do that correctly, you are going to get 1/5 times 1,300,000. And that's giving us 260,000. 260,000. 260,000. So if you sum it up, you are going to get 1,556,000. 1,560,000 shares. Sorry, 1,560,000 shares. And here we are not going to multiply it by the bonus fraction because it is on this date that there was a bonus issue. So we apply the bonus fraction up to the date of the bonus issue. So the bonus fraction will not come here, but please, you will continue with the time fraction to the end. The time fraction will continue to the end. So the question is, when was our next issue from the bonus issue? It was to August, September, August and September, because the next issue was on October. So this is going to be 2 or multiplied by or divided by 12. That will give us for this particular one. When we are done, then we multiply it to 6. So here there will be no bonus fraction. The reason is that this was the date that we issued the bonus shares. This was the date of the bonus shares. Okay. Then the last one, our existing shares. So our existing shares is going to be 1,560,000 plus our market issue of 1 on which date? 10th 2022, and that was 200,000 shares. So if you add everything, you're going to get 1,760,000 shares. Remember that you will not apply the bonus here, but you apply the time fraction here. And from 10th of October, so October, November, December, 3 months. So this is going to be 3 divided by 12. Multiply this to get our weighted average number of shares. Now we can confirm this to see if we are correct. We can confirm this to see if we are correct. By the 12 of, let's see if you get the numerator to be 12. So 3 plus this will give us 7. Plus this will give us 9. Plus this will give us 12. That shows that we are correct. So if you do it and the numerator is not up to 12, it's not summing up to 12, then you should know that you have some issue. Now let's do the computation. So it's going to be 100,000 times this, okay? So 1 million times 6/5, which is the bonus fraction, times my time fraction of 3 on 12. So that is giving us 300,000 over here. 300,000 over here. Let's look at the next one. This is going to be 130,000. 130,000. 130,000. This one times 6 on 5. Then times 4 on 12. And that is giving us 520,000. 520,000. Then the next one is going to be 1,560,000 times 12 times 2 divided by 12. That is giving us 260,000. 260,000. 260,000. Then we are looking at the last one to be 1,760,000 times 3 divided by 12. Times 3 divided by 12 is giving us 440,000. 440,000. So we sum up all these to get our weighted average number of shares. So 260,000 plus 520,000 plus 300,000. And that is giving us 1,520,000 shares. So this is our weighted average number of shares. Therefore, our basic earnings per share is going to be our profit after tax. So it's going to be the 250,000 minus our non-cumulative preference share dividends of $30,000, all divided by 1,520,000 shares. 1,520,000 shares. And that's going to give us, so 220,000. If you take this from, you get 220,000, all divided by our weighted average number of shares. So if you do it correctly, we are going to get our earnings per share to be $0.14 dollars per share, or we can call this 14 cents per share. That is basic earnings per share. So this is how to determine your basic earnings per share when there's a market issue and then there's a bonus issue. Remember that the bonus issue will have to come with a bonus fraction, and then application of the bonus fraction will take place up to the date of the bonus issue. So that the date of the bonus issue, you don't include the bonus fraction again, but you will continue with the time fraction. I think you can also use this particular approach, the single approach. So here, this one would have taken 12 over 12. Then this one will take from 1st April. So this will take 9 on 12. Then, so you multiply this by this. Then this will take, this was on 1st of August. So I'm sure this will take, I think, August. So August, September, October, November, December. So this is going to take 5. So 5 on 12, and this will take 3 on 12. If you are using the single period. But remember that these values will not be the same. These values will not be the same. If you use this particular approach, you might get it wrong. Because when you come here, you only have to consider the 300,000. If you come here, you only have to consider the 260,000. If you come here, you only have to consider the 200,000. And if you don't take care, you may end up, complicating things. So you can also go by the cumulative approach to make things better for yourself. So with this one we'd have multiplied by the 100,000. We'd have multiplied this by the 300,000, this by the 260, and this by the 200,000. So this is the way to determine your basic earnings per share when there is a bonus issue and a market issue. Now the next particular circumstances we will have to look at is when there is a right issue. I don't want to be making the videos or the lessons very long, so I'm going to end this one here. We are going to end our today's lesson on this particular one, and then continue with right issue and diluted earnings per share subsequently, or in our next lesson. Thanks for joining Ronas Academy. Don't forget to share, subscribe, and leave comments in case you have any.